Hello, everyone, and welcome to the Open eCry market commentary for the week of June 25th. My name is Toby Gennaro from Trade with Precision, and we'll just be taking a look this morning at where the markets might be headed this week for the next 3 to 5 days, and looking at some of the U.S. equities markets as well as some foreign currencies. Okay, so just getting started here on the S&P 500. I'm just looking at some of the very highest time frames here, the monthly and the weekly charts, and then and we can kind of get an idea here of where the markets might be heading with some key levels. Just 3 basic key levels here that we want to be keeping an eye on. Obviously, we were at this 1420 level, which was the most recent high over the last several months, and then we've been right around this one key support level, now becoming resistance at 1340. And then we had the actual low of the most recent pullback, which was this 50% retracement of this entire move back down to that 1260 level. So we still have another week here for this candle to close out on the monthly chart. And we're not going to know right now. It's looking indecisive. If we get a bounce off of this 1300 level, if that can hold, then more than likely if the markets move up and close higher into the end of the week, we'd get a bullish candle right here in the buy zone on the monthly chart, which would be very good for a potential move higher. As we move down to the weekly chart, we can see that 1260, the low that we put in place, which is the 50% retracement from the most recent high and that most recent low, going back quite a ways. And so basically we just got essentially a 62% move, a retracement back along here, and we just got a major sell-off along with all that resistance right in there along that 1355 level that we talked about last week. We just got a complete sell-off there with some more bad news coming out of Europe, which we think we're going to be headline-driven here, news headline-driven here for a while. But in looking at some of these other time frames, like the daily chart, I've got a Fibonacci drawn in place here from that high of 1420, and then all the way down to the most recent low that we just put in here at right around that 1260 level. And so we got a 62% retracement right on the nose, which put us right around that 1355 level. Coupled with that level, we got a sell-off, and so we haven't made a lower low. If we can keep, if the market can stay above this 1300 level, there's a good potential for a bounce right here, and we'd still be within the trend of these higher highs, higher lows, higher highs, and we'd still have a higher low in place right here on the daily chart, which would still be very bullish for another move back into this 1355 level for a retest. So that's kind of what things are looking like right now. If we just did an even pull back to this 1288 level, we could get a bounce there as well, and that would essentially put in a pretty solid reversal structure here on the daily chart, which can be fairly powerful. And then the other option here is for a retest of this 1255 level, which potentially would give us some very strong divergence on the daily chart on the indicators, which would be then another reversal pattern. So kind of anticipate some of those levels in your trading for this week. For right now, looking at the markets, they are a little bit directionless and indecisive, and seem to be taking a lot of the cues out of the news coming from Europe and now Spain, looking for a potential bailout on the banking issues there. So keep an eye out. If you go down to some of the lower time frames and looking for some shorts, you can find some of those trend flows on all of the charts. Right around 120-minute. Charts and lower, and you'll see some of those pullbacks into the moving average. It'll have all the moving averages in alignment to the downside. So just temper that with some of these levels here around 1300 and 1288, and keep an eye out for a major reversal pattern here setting up on the daily chart. And looking here at some of the small caps on the Russell 2000, again, we're looking at the monthly chart, which looks very similar to the S&P 500. We're looking at this candle right here on this monthly setup where it's looking very indecisive right now. We've got another until the end of the week on Friday. This candle's going to close out, so we're not going to know until then. But if we were to get a bounce going into the close of the week, we'd get a very bullish candle setting up right in the buy zone amongst that 10-20 period moving average on this monthly chart, which can be a very powerful technical signal. As we take a look at the weekly chart, we can obviously see the lower highs and the lower lows. We just put in another lower high right here on basically this 62% retracement of that move. So we've actually have a break through the low of that candle right here from last week. So that is a pretty good signal that there is some additional ways to go down at this level. The next level down is going to be that 740, 745 level. And as we start to move down to the daily chart, we can start to see some of that a little bit more clearly. Had a good reversal pattern that set up here last week, and we got another high out of that, and so we're just getting a pullback. We don't have a lower low in place. If it were to pull back, that 745 level would be a place to anticipate a bounce. Right here, we go down to the 480 chart. I've just put in a Fibonacci from that most recent low that we put in at 724 to the most recent high that we just had last week, up right around that 780 level. So right now we're just getting a pullback right down into that 50% level, and which couples very nicely with this 745 level is that 62% retracement. So either one of these levels we could see a bounce. I would be guessing here looking at the 62% level with some additional support levels in there as well, coupled with that would be a very reasonable place to get a bounce, and we would still be within the limits of this trend of higher lows and higher highs to then get a bounce off of that and still move back up to retest that 780 level. So again, that 780 level, until we can break that level and then get a pullback into that level and have that resistance level become support, that's still going to be preventing us from moving higher. So keep some of those levels in mind as you're doing some trading this week, and it'll give you some guidelines to trade around. Again, the same on the S&P. If you start to look down at the 120-minute charts and lower, you'll start to see all those moving averages in alignment, and then you can look for some of the shorts setting up on in those moving averages amongst the 10 and the 20 with some of those trend flow setup candles. But again, temper some of that with some of these levels here at 62% and even at 50%, and make sure you pay attention to the distance and the overextension of price from those 10-20 period moving averages, because you'll get those snapbacks, and that'll give you some idea of how to follow the trend. And just looking at the euro dollar here, looking at a foreign currency pair, and we're looking again at the monthly chart, and this is probably the best place where you can see this level right here at 123 that's coming into place. So we're not right there yet, but we're pretty close. We're getting a little bit of a bounce off there, and as you can see on some of the other time frames, especially on the weekly chart, just have a nice succession of lower highs, lower lows. We just put in another low here just about a month ago, and now we just got to bounce right back up into the moving averages. The moving averages are in alignment, flowing over to the downside. So we just got a break of the low of that candle. Looks like we're going to be going lower. We have a lowest level here of 123 that we could potentially retest. So as we go down to the daily chart, we can look at that level right down here, which gives us an opportunity. Price is again hovering right around the moving averages, and if we start to look for some of the setups down here on the 480 chart and lower, we can start to see all the moving averages in alignment, flowing to the downside, and then looking for those pullbacks into that sell zone, and then to get short potentially down to this 123 level. So good momentum on the charts, and good setups on the moving averages with price giving you some decent setups there on some of the intermediate time frames. So keep some of those levels in mind right there around 123, and then also the previous low here that goes back quite some ways, all the way back down to 119. And then keep in mind you want to start looking at the indicators when they start to diverge, and you start to get those retesting levels down at some of these lows. You'll start to see some reversal patterns set up with some divergence on both indicators, and that'll give you an indication of when there's going to be a potential bounce and when you might want to cover some of these shorts. So keep some of those levels in mind when you're trading the euro dollar this week. Yeah, we'll just wrap up this week's commentary with a look at crude oil. And as you can see with crude oil, we're sitting right here at a previous level here, right around 78. And the actual low that we put in quite some time ago, this is a monthly chart, this goes back quite a ways to 2009, that level of 68. So we're only 10 points above that, but we've got some extension on the monthly chart. We've got some extension away from the moving averages on the weekly chart, and we're pretty much right about at that level. And we've got, this is basically the third touchdown there. And so just looking at the range that we've been trading in on the monthly chart, right around here, we can also see that on the weekly chart as well. But as we go down to some of these other time frames, like I have the 240-minute chart up, gives us a little better, finer tune to look at, something between 85 all the way down to this level at 77. I'd be looking for the next bounce, maybe right back up to the most recent high, which would be right around 80. And I've got the 240 chart up because we have a reversal structure coming in here on the 240 charts and lower, and we've got some nice divergence. If you go down to the 120 and the 60, you'll see some nice divergence there setting up on both indicators, along with this reversal pattern setting up. So it's very possible, good probability we might get a bounce right back up into that 80 level. And so if you're paying attention to that, keep some of those levels in mind. You can see that level pretty nice right here on the daily chart. And they get you set up right around that 81.7 level. So potential there for a little bit of a counter trend trade. These aren't always the best probability, but you can get some very good reward to risk on some of these because we have such a tight level in here right around at the low of 77.6. So take a look at oil, see what you think about that one as a reversal play, and that'll wrap it up for the week on terms of the updates. So thanks for watching Opening Cry's market commentary for the week of June 25th, and we'll look forward to speaking to you next week on the market update again.